so, by the way, because this is a big escalation. Tankers, they were not Russian tankers, by the way. They were tankers of third countries, but countries that were going to stock up oil in Novorossiysk. And everybody says it's Russian oil, but it could be oil from Kazakhstan, from elsewhere in Central Asia, because Novorossiysk is a major oil hub. And Kazakhstan is furious about that attack. Apparently, Erdogan is angry and is now threatening the Ukrainians with investigations about this. But anyway, there is a dirty war going on. The Russians appear to have taken some kind of retaliatory action as well. They killed, well, it's the Ukrainians say they killed one of the leaders of the Ukrainian SBU who was involved with the assassinations in Russia. He was killed in Kiev. And then we still have the unresolved question of the assassination of the Ukrainian far-right politician Andrei Parubi. So when parties are involved in a dirty war, sometimes they do need to talk to each other in order to discuss or try to discuss guardrails. And that's what I suspect this meeting in Abu Dhabi was a bit about. If it sounds like a scene from the Godfather movies, it is because that is exactly what it is. So especially given what was probably being talked about in Abu Dhabi, I can absolutely imagine that the Russians would have been very, very embarrassed indeed by the fact that the existence of this meeting was disclosed. And again...
All right. Okay. Not many people here. I guess the holidays begin early. I guess the holidays begin early. We didn't go up. Nothing. All right, we're just going to not use the correct microphone. It's just going to have to be this microphone. This has been giving me a terror to work. Let me see if I can try it again. No. All right. Just going to have to use that microphone. It's not going to sound as good, but such is life. I better make sure the Wi-Fi is on. That could be the issue. That could have been the issue. The Wi-Fi wasn't on. Okay, we're just going to have to go with a lesser microphone. It's just how it is. I can't fix it. I've been trying to fix it, and I've run out of patience. We are at 15 million shares of Railtown, which is a great position. I have called in this morning, and again, this is probably the 10th day in a row. I'm unable to get any kind of meaningful update. So that's just where we are. But that doesn't mean things are priced correctly. I think Railtown is completely mispriced. And if you allow me for just a second, I'm going to be your analyst. To be clear, I've never taken the test to be a financial analyst or a research analyst, but I'll show you one metric that's going to blow you away. And if you're not buying the stock today, if you're not adding to your positions, if you're not establishing new positions, I think you're going to regret it. Railtown is down today. Is down a penny and a quarter. It's at 34.78. The other cavalcade of courtesans is down too. GNS is down 5 cents at 74.65. Finger is down 2 cents at 132.8. I don't know why I have it here. Bank of America is down 10 cents at 53.54. I think that'll be a stock as the market rallies. Bank of America will be a stock to take a put position in, I believe. G-Bucks is down somewhat at 10 cents, 0.102. Railtown is bidding 34.24. The ask is 35.99. The volume it shows is 201,000 shares. Nobody is selling. Of course, you're going to say, well, nobody's buying either. Well, I don't know. It seems like somebody's stepping up and buying. But please do not confuse. You know what? There are computers out there. They have computer programs. They're set up. They have algorithmic trading. They have parameters. They're trained to push the bet. Just keep pushing the bet downward. There's no information out on Railtown, which we'll discuss. I'm a little disappointed that something didn't come out this morning, but I had no idea. It's not like they violated. It's not like I was told something was coming out. I just was hoping something would come out this morning. But we'll go through the most likely things to be discussed and come out. I think there's pretty much a hard deadline of, well, I wouldn't call it hard, but I would say it's a obvious deadline of December 17th, which is the annual meeting day. So there'll be an incentive to get news out, get research out, get presentations out, get interviews out, get institutions interested, I believe, prior to the annual meeting. On the other hand, the annual meeting might just be a perfunctory call the roll, we got the votes, thanks for stopping by type meeting. But it does give them a chance, if they choose to do so, to tell their story. Okay. So there's 12 days until, counting today, until their annual meeting. We can write today off. So there's going to be 11 days. I want to talk about one metric, one revenue stream, one glaringly obvious upside in this stock. Now, you're going to say, well, if you're right, why isn't it in the price of the stock? Again, we know that there is constant, every single day, computerized selling. That comes from day traders pushing their bets. It comes from, I guess, what you would call swing traders pushing their bets. They just have to be right for a nanosecond. They just have to be right for 15 minutes. They just have to be correct for 10, a day, 2 days, 10 days. So all they're trying to do is get the direction of the stock working in their favor. They know we run out of buying power. And we get scared. We get emotional. Oh my God, it's down. And so we can't help it. We can know everything. But we look at it, we go, oh my God, something's wrong. The price is down. Instead of looking at it, oh my gosh, it's on sale. I can't believe it's this cheap. It's just human nature. It's just human nature. And they know it. They know that. That's factored into their scheme. Okay, the market cap of Railtown today is $49 million. That's the market cap of Railtown. $49 million. The market cap of Finger Motion, for example, is 82 million. $82,570,000. Yeah, but Finger's a better story. And I'm not trying to pick on Finger. I'm just comparing something that most of you know. They have revenues. So they're a better story than Railtown because they already have revenues. Okay, let's look at their last income statement, according to Yahoo. Total revenue for Finger Motion, 35,888,000. Let's call it 36 million. For Finger Motion. Gross profit, $2 million, it says. But we don't know if that's an accounting entry. It doesn't break it down. Well, we'll look and see if they have a cash number down here. Cost of revenue was 34 million. So that's where they get the gross profit. But the operating expense is 8 million at Finger Motion. So their operating income, Finger Motion, is negative 6 million. They burned 500,000. I don't know the cash versus accounting entry numbers, but on the face of it, they burned 500,000 a month. They have 58 million shares, 58.5 million shares outstanding. Total expenses are 42 million. So typical, you know, earnings after taxes and depreciation, they actually, I would argue it's not all that pretty. All right, so that's enough on that one. You guys are familiar with Fingers trading at $1.33. Well, Railtown doesn't really have any financials, has no revenue, and it must suck because management took 10 or 11 months to get a deal done that was friendly. Obviously, if the news on revenues were good, somebody would be cheating in Canada because news gets out. Canada's just got to be like the hotbed of liars and cheaters in New York City. So the news would get out. Why isn't it up? Obviously, Corey sucks. Management sucks. They've allocated money improperly. How can you expect a company who cannot even close a deal to become $1 billion company? It doesn't make any sense. The AIP acquisition sucks. The companies inside the network all sucks. Their revenues suck. Their websites are all crap. I mean, it's just a loser. Everything you've been telling me is wrong. Okay, that's one way to take it. So have we gotten that out of our system for today? I acknowledge all that. I think it's wrong. But I'm acknowledging it. I'm going to start using my word again, even though I think it was Brandon Neely that it might have been. I think it was Brandon. It might have been Justin that pointed out that quiet period refers to a period around earnings or an IPO. Screw it. I don't know what else to call it, so I'm going to use the term quiet period. My term, using it incorrectly. There's been a quiet period since February 11th through Thanksgiving Day caused by the acquisition of AIP. That quiet period has meant that the company can't talk about anything. Secondly, that all the insiders and large shareholders and anyone that can be presumed to know material inside information as it relates to Railtown's investors can't buy anything. All of the insiders, large shareholders, institutions, retail, who can be presumed to know material inside information as it relates to AIP can't buy anything. All of the large shareholders, institutions, foundational shareholders, management, consultants, that as it relates to any of the 165 companies in the network cannot buy Railtown. Anybody associated with Canaccord Genuity, and that includes their institutional investors, their bankers, their retail system, their research analysts, cannot recommend the stock and cannot buy Railtown. It is my opinion that quiet period is still in effect. It is still in effect. Ah, you're crazy. You've been saying that for months. Well, you know, we can get pissed off at the facts, but that's the facts. I think the quiet period is still in effect. So do we bemoan it? Do we get upset? Hey, it's the end of the year. It's time to get out. My deadline, I have an artificial deadline. I never hold any stocks after the end of the year. All right. This is just like all the other stocks. It's just like, Hams or Borders or Brunelleschi's. It's all like any of the others. Okay, I can't fight. It's all emotions. It's all emotions. It's letting emotions and muscle memory tell you something. The stock price is not telling you anything. It's still in a quiet period. No, that's not the correct word. I Googled it. The stock is in a quiet period. The company can't talk about revenues. They can't talk about deals. They can't necessarily talk to all research analysts. Maybe they can, maybe they can't. But the research analysts, if they're talked to, may not be able to release research. I'm sure at Canaccord, although I don't have access to Canaccord Genuity, it may still be on the restricted list. Yeah, but they finally closed the deal on Thanksgiving Day. Why isn't the quiet period over? Well, there could be all sorts of reasons. One, whatever agreements institutions signed to get information might have a buffer. It might say you agree not to trade the stock until 5 days after news release on AIP. It could be something like that. I don't believe it. If it's good news, it'd still get out in the stock. People would be buying. All right, I can't fight that. I cannot fight that attitude. Either the stock markets are corrupted by these criminal systems of computerized selling or they're not. The stock price is either wrong because of that or it's not. I would suggest that on Friday, Thursday even, something like 400,000 shares traded. I can't remember if it was Friday or Thursday, but end of last week, 500,000 shares traded in Canada. I'd say somebody's buying. But the computers always win. They just push their bet. The stock is now down a penny. Oh my God, I'm tired of waiting. Oh my God, nothing you ever say is true. Oh my God, Corey should have been doing this, should have been doing that. Oh my gosh, he can't even get a deal done on time. My God, the technology is expiring. It's the end of the year. The whole thing is going to pass us by. Oh my, the sky is falling. That's what the shorts would like you to believe and be thinking. And it looks like the shorts and their computers may have their way today a little bit. But I'm going to show you something. This is in my judgment. Railtown undeniably now owns the AI network partners, the AIP. Undeniably, Railtown now owns it lock, stock, and barrel. They control it, and there's no debate. So, as somebody I spoke with earlier said, are you more likely to sell it now after that news? I doubt it. But not the criminals. The criminals are going to keep the psychological pressure on you. Yeah, but if you're right and everything's good, surely there'd be buying in Canada and they'd know. And so you're wrong. Everything you've said is wrong. All your information is wrong. Well, I'd say grow up. I'd also say, why don't we recognize that it gives us a great buying opportunity? Awesome buying opportunity. Awesome buying opportunity. Now that Railtown owns the network, AIP Partners, they own it. You cannot deny it. It closed. Last week, it closed. It is owned and controlled by Railtown. That's just a fact. So what I'm going to tell you over the next 20 minutes, 30 minutes, is my attempt to get you to buy the stock before institutions start buying and before research comes out. There's a time lag between the news and the price movement in the stock. My argument to you is that the stock is going to go to Lang Chain's valuation. Put it another way, Lang Chain was valued at 1.25 billion. My argument to you is Railtown is going to go up from here $25 times. 25x. That's $8.75 a share. If you want to adjust it a little bit because you figure they'll issue some shares, call it $8. But I'm going to suggest to you that by the 2006 Players Championship, the Grand Slam of Curling in Manitoba, the Players Championship, January 6th through January 11th, 2026, at the Steinbach Southeast Event Center. By the end of that championship, I think the stock will be between $5 and $8 a share. And you're going to say, oh, you're crazy. You know what? I've been called worse. But that's what I think it's going to happen.
Urak, jöjjenek velem a házamba, egyenek valamit és nézzük még a curling döntőt a TVB. Épp Kanada játsza Mexikó ellen. No, 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 no.
So by January 11th, I think the stock will be $5 to $8. Oh, you're crazy. Well, we'll see. I've been wrong. I mean, admittedly, I've been wrong. But what's the main difference? The AIP deal is closed. Now, we don't know. We have no idea. There might be other deals out there that, using my word, that I've been correctly admonished doesn't exist. But the quiet period may extend for other reasons. Like, for example, the TELUS revenue needs to be disclosed. I don't know, but that might be something. Or maybe there's another deal pending. I don't know. But we have to flush out all of the material non-public information before those buyers and the research can come out. That lag, whether it's tomorrow or it's next week or the following week, that lag gives you an opportunity to buy the stock. I mean, if you want to despair and if you want to curse me for calling it completely incorrectly, the stock's cheaper today than it was a year ago. If you want to curse Corey Brandolini, because how the hell can a leader allow a merger to take 11 months? If you want to curse Corey Brandolini for not having better relationships with TELUS or whomever, fine. If you want to curse the company for not having an administrative staff that's larger or better attorneys or whatever, fine. But you know what? That's all behind us now. It's all behind us. Now, if you want to take that and extrapolate that because Corey couldn't, and I'm just picking on him because I don't want to name all the other names. Corey couldn't get that done. How the hell can he get anything else done? Fine. I'd say that's black and white thinking. And I think it's just being pissed off and being a spoiled brat. It's time to get out of that mood. I'm subject to those moods myself, but it's just time to shake it off and admit, damn it, it looks like it's going to be January, not December. But you know what? It still could be December. It still could be December. Why? Because Sequoia valued Langchain, who has an inferior product, at over $1 billion. Railtown is valued under 50 million right now. Million versus billion. So what's the disconnect? What's the disconnect? I'd say it's information. Well, people would already know, the stock would already be up. Well, my argument, that's not true. The people that know about Railtown are just such a small subset, even of the Canadian financial system. They're just the people that Corey knows. They're the people that Dr. Tom Core, Norbreka, and Ruffalo know. You know, maybe Omers, maybe Mavericks type investors. And they're the ecosystem of the private companies, and that's it. That's all it is. Canaccord can't talk to their investors. None of the other brokerage firms in Canada know about Railtown because Railtown is the exclusive customer of Canaccord Genuity. And it's on or it was, I'm sure it still is, on Canaccord's restricted list. So we're still in this lag between the closing of the AIP deal and the lifting of the quiet period. Oh, you're using the wrong word. Well, excuse me. I don't know what word to use. So what are the revenue streams ahead for Railtown? They've already missed the window. Technology moves so quickly. You know, okay, got it. I got it. But we are where we are right now. We are where we are right now. One source of revenue is Railtown's conductor and it's 4 other tools being sold in enterprise sales agreements to its pipeline, to new customers, and now, because they control the network, cross-selling it to the 5,000 companies and users in the network that Railtown controls. And one already announced enterprise sales agreement is a company called Uniserve, who has 3,000 enterprise users. And we also know TELUS has a client base, huge, millions, tens of millions, 100 million. Many of those are enterprises. They, conceptually anyway, they're going to direct their customers to use Conductor or some subset of their customers. So you've got new enterprise sales agreement from Conductor's, from Railtown's own efforts to sell Conductor, from cross-selling in the AIP network, and from TELUS's referrals. That's gigantic. But that's, so you've got enterprise sales agreements. You've got the roll-up revenue of 400 million potentially or more, which I would submit to you will happen next year, or as soon as the price is over $5 or $6. They're not going to dilute their ownership, but that's a huge amount of revenue. If they get half of it, 200 million. That's probably first quarter, second quarter business, but it's coming because guess what? They now control the network. They own the network. Where else is revenue going to come from? I'm sure I'm missing something, but the other place revenue is going to come from is hosting. Currently, in the AIP network, there's now close to 190 companies, up from 160, and growing, I think, obviously. Those numbers are confirmed in this company presentation, if you extrapolate. They are currently spending $125 million to host their AI product in order to generate revenue. They are currently hosting their tools at hyperscalers like, I don't know where, Microsoft, Amazon, etc., at different data centers than the TELUS Sovereign AI Data Center. Brand new. Complete capacity, state of the art, best chips, best energy efficiency, suite. Well, Railtown and TELUS are going to revenue share on those hosting fees for every company that transfers to the TELUS data center. We don't know the percentage. I don't know if we ever will. Maybe the research analysts will. But we do know that earlier this year, that spend for hosting, that cost on the part of the network companies was $125 million. I'm sure it's grown. Why? Because there's more companies in the network. And if you assume a modicum of success overall, yeah, but a lot of those companies, they don't even have a good website. Okay. But I did check out, and I've gone through, and any of you guys can do it. I guess that I have it over there. But I went through 50 to 60 of those companies, Googling them in the network, and they had revenue. I think I found about 180 million of revenue. It might have been more, 200. So the revenue is there, maybe not in every single company. So just as a background, we know a couple of things. We know that Sequoia valued Langchain at 1.25 billion market cap based on a projection of revenue which was extrapolated from a partial moment in time, part of June's revenue. So they estimated that at that point in time, the forward 12 months revenue, annual recurring revenue for Langchain was something between $12 and $16 million. We also know that Langchain needed to raise $125 million to improve its technology because their idea is relatively new. But they have a lot of customers, apparently, Fortune 500, government. But we also know they're not making any money. So they have a zero margin. Yet that company was valued at 1.25 billion. Another company we know about is SoundHound, who is estimated to do between 150 and 200 million in revenue next year, but not make any money. And they received a 35x valuation. I think it's pulled back to 30x right now. But recently they had a 35x valuation on that revenue by the market. They're a publicly traded company. AI, but not making money. So what is Railtown? Railtown is AI, but it's also a tool for software developers. That's a more enduring, a more robust, a more substantial or more proven marketplace software as opposed to AI. On the other hand, to my feeble brain, AI and software seem like the same thing. So if we assume that the network of AIP companies move all of their hosting cost to TELUS, remember, Railtown controls those companies. It may be a process, but we're talking about forward revenue. And once it moves, it's there for the lifetime of the data center, which admittedly, I don't know how long data centers last. But I assume it's just a matter of upgrading the chips if it comes to that. So theoretically, they'll last a long time. The ones I've seen out here when I raised money in the last, the dot bomb bubble, and we'd go, this one CEO in particular would take me out to visit, Those have been around for 25, 30 years. So it's a long life cycle. We know that the revenue sharing deal between TELUS and Railtown, the cost of generating that revenue is on TELUS. So whatever the revenue split is, it's essentially free to Railtown. So it's 100% margin, 100% margin, 100% margin. Now I'm going to show my background a little bit. But I would suggest to you 100% margin can be better described as cash flow. In the oil and gas business and mining, but particularly in the oil and gas business, because of depreciation and all sorts of tax advantages and et cetera, and costs of borrowed money, all of it. Cash flow is the metric to judge oil and gas companies, particularly the emerging oil and gas companies and the mid-size. I think by the time you get up to the majors, assets can be more important. But cash flow is the metric in the oil and gas business. And the multiple paid for cash flow can be very high depending on exploratory opportunities or prices for oil and gas. The multiple can be low, particularly when everything's doom and gloom and there's blood in the streets in the oil and gas business. So you get these wide swings. In a bear market, the multiples can go down to 3 or 4 times cash flow. There's a lot of reasons for that, because the banks are claiming most of the cash flow, because companies can be their loan deck, their collateral can be recalculated, and they might have a call from the banks, or they decide to let go of some of their leases as cost cutting. When it gets dark and negative in oil and gas, it can get really, really black, in the sense of night, on and off. It is the classic, what's that term? When you're manic depressive. I had a boss that said, we're all manic depressive in this business. When we're doing well, we feel great. When we're doing poorly, we're just depressed. And oil and gas can be like that. When everything's going right, it's a mania. When it's negative, it's a collapse. But if a company has cash flow and it has duration, it's going to get still a multiple of 3, 4 times, maybe 5 times its cash flow in the darkest of outlooks. As the euphoria comes in and money just chases everything in the oil and gas business, and you're in a bull market and oil prices are skyrocketing and everyone talks about peak oil, which I believe in, the multiples can go very high. 10 times cash flow, 15 times cash flow, even higher. All depends on the individual story. But as a general rule of thumb, as a starting point, if you're looking at, say, a small cap to mid cap oil and gas company, perhaps a startup too. But if you're looking at a producing company and you want just a rough, quick, I'm looking at it quickly and I'll move down to other things. If you use a multiple of 5 to 7 times cash flow, that gives you a pretty good idea what the stock is worth. Now, the key is the cash flow has got to be anticipated to last longer than 5 or 7 years. And that's partly by additional infill drilling or developmental drilling, or it's just a tremendous project, which probably will require maintenance and some additional drilling. But maybe the life of the whatever it is extends for 20 or 25 years, and it doesn't have a huge decline curve. So 5 to 7x would be a multiple that an oil and gas company might use based on cash flow. Well, here we are in this AI excitement, and people are paying 200 times revenue, not cash flow, not earnings, 200 times revenue or more to acquire what they feel are the best AI companies out there. 200. Oil and gas has been down so long, 5 to 7x. That'll change. That'll change. Probably coming around the corner next year. But I think oil's got a tough 9 months ahead of it unless we go to war. And then it'll be generational. It'll be the next 5, 10, 15, 20 years. So what does that mean to Railtown? I would suggest to you that Railtown, because they own AIP's network, lock, stock, and barrel, and because they will command the movement of the hosting costs to TELUS, thereby, oddly, right now those costs do not belong to Railtown. They belong to the network companies. But eventually some of those costs will come into the Railtown balance sheet as Railtown buys companies. But that's next year. I bet it could be as late as the second quarter of next year. But as those network companies move their costs to TELUS's data center, that becomes revenue for Railtown at essentially 100% payout. It becomes cash flow, in my argument, to Railtown. Cash flow has the benefit of coming, it's a number you can use before you adjust things for amortization, I don't know what's in a software company, discount for chips bought or something, depreciation of desks. I don't know, but it's a clean number before accounting gimmicks. So let's just start with a number. We know that Railtown's deal with TELUS is something, but I don't know what. So I'm going to go to my oil and gas background again, and just say it's an eighth. An eighth is usually the minimum that an operator or the geologists or the government all combined are going to burden a project with if you buy it to drill it. At the barest minimum, it's going to be an eighth. It's usually as high as 22%, but an eighth, I can't think of, in my short experience of 30 some years, I can't think of one that was cheaper than an eighth. So let's use an eighth, and then let's look at the 125 million. I think we can assume that that's probably grown, I don't know, to 150 million from the network of companies having grown from 160 to 190. It's a 20% growth. So it gets it to around 150. But then we know that the digital group, I forget how many companies are there, the Uniserve Computers, 3,000 enterprise companies, the AIP network, 5,000 end users, there, and the pipeline, Railtown's own pipeline, they're all going to have companies who decide to use Conductor and move to the TELUS. Not even move. It may be just establish a data center relationship, and Railtown will say, well, here's the deal. You do it at TELUS. Remember, Railtown controls those relationships as they make their deals. Most of them, anyway. And then the other area is TELUS has something like 130 million users. I'm sure most of those are individuals, but some small percentage of those are enterprises. TELUS apparently needs the Conductor platform to improve their service and make their service competitive with other offerings. So that'll be a hosting relationship. So putting that all together, I propose to you that at some point in the next year, going forward 12 months, and I'd say as soon as the second quarter, and maybe as soon as the first quarter. But again, it's as long as it's projected to happen, the market will start discounting that good news into the present. So research analysts could come out with buys that bring a lot of that good news forward to January, for example. Anyway, I suggest to you we use 200 million as the hosting revenue. I suggest to you we use an eighth as the revenue share. And I suggest to you we use 100% margin. And we ignore all other revenue. We ignore the Conductor enterprise sales agreements in the pipeline, new that are not in the pipeline now, but are pending and yet to be. We ignore all enterprise sales agreements in the cross-selling of the 5,000 end users in the AIP network. We ignore all enterprise sales agreements in the 3,000 companies or some subset of those at Uniserve. We ignore all of the SAs at the 14,000 enterprise, some subset at digital. We ignore any enterprise sales agreements with the catalog of customers at TELUS. We just ignore all of that. We also ignore all roll-up revenue. Just ignore all roll-up revenue. The only thing we're going to look at is the revenue sharing agreement based on hosting conductor. Railtown controls the network, who currently does somewhere between 125 and 150 million in spend on hosting. Railtown will move that over. I don't know how long it'll take, but remember, it doesn't have to be booked. It just has to be projectable. TELUS wants to improve their service to their clientele. Some portion of their enterprise users will come use Conductor at the data center. Same for Uniserve and Digital. Same for the 5,000 end users in the AIP network. So all collected, the hosting cost, which becomes a revenue source for Railtown, let's assume it's 200 million. In the future, it doesn't have to be right now. It can just be projected. Let me show you some numbers. These are my numbers. And I think I'm supposed to have more than one page. Yeah, is that it? That's not it. That's somebody else's. I think this is me and this is me. Well, we'll find out. It's very hard. The thumbnails are so small to read. Okay, so here's my assumptions. The number of companies in the network is now over 180, possibly over 190 as additional companies join. The disclosed cost in the company presentation is probably low. If we assume a 20% increase in that hosting cost, maybe we start with 150 million as the annual spend, because at 160 company, it's 125 million. Well, we don't know. I'm just giving you my assumptions. Further, TELUS will direct customers to Conductor. Uniserve will steer a portion of their enterprise users to it. Railtown will generate other enterprise sales agreements, as I described to you, and it'll all add to the hosting total. So here's my assumption. At some point next year, for the forward 12 months, the annual recurring revenue from hosting is projected to be $200 million. The payout is 100%. And as I just described to you, another way to look at this 100% margin is that it is cash flow. And the reason I pick it is because you can't play with that number with accounting. So I'm missing a page. I'm missing a page, but I'll go on. Let me see if it's there, if I can find it. Maybe that's it. Yeah, okay. This is the page I left off. So the current roster of network affiliates currently spend on their hosting, and they need to do that. They have to make that spending in order for their businesses to show revenue. So they have a spend for hosting. It's greater than 160 companies with 400 million, as we've seen, in annual recurring revenue, and it's disclosed at 125 million annual hosting cost. Now that Railtown Technologies owns and controls the affiliate network, that annual cost of hosting will become a source of income for Railtown. And I don't know what the revenue sharing could be. Does Railtown get 5%, 10%, 15%, 20%, 25%? I don't know. None of us know. So I'm just assuming an eighth because I'm familiar with it. And that's 12.5%. So if we assume an eighth, we assume 200 million. And further, you're going to see here, if we assume 250 million shares, 250 million shares as a fully diluted number, using an eighth times 200 million, using, an eighth gives you, using 200 million, an eighth gives you 50 million in revenue to be shared. It gives you 50 million in the shared revenue going to Railtown. 75, what would that be? 150 million goes to TELUS, 50 million goes to Railtown. 50 million. So if you use 5x, something's wrong here. My numbers are totally wrong. My numbers are totally wrong. If you use 200 million, I'll have to use my whiteboard because those numbers are wrong. If you use 200 million at an eighth, that's 50 million. All right, those numbers are wrong. So we'll do it here. We'll do it here. And I'll correct that sheet for later. But we can make our point. It'll just won't look as good. I'll just have to do it with you. So the revenue to Railtown is 50 million in my assumption. And that revenue will continue for years, 10, 20, 30 years. So one of the reasons in oil and gas you use a lower multiple of cash flow is if you buy the properties, you have to assume the cash flow is going to end at some time. So you don't want to pay more than the cash flow you're going to receive. So, if you're just buying a property, you could pay as low as 1 or 1.5 times cash flow. But in the market, I gave you the ranges, but in a kind of a soft, neutral market, 5 to 7 times cash flow is a target. So if we use 7 times, I'm embarrassed because what I did is I used 200 million instead of 50 million. I should have made that chart I should have included that number in a column. I just didn't know how to, and I would have avoided that mistake. So anyway, at a 7x on that cash flow, we get to a $350 million market cap. If we divide it by 250 million shares, we got a stock price that I think is very conservative, but it's higher than where the stock is trading now at $1.40. So even now, with the stock trading at 49 million, you could see cash flow of essentially $1 a share. But if you did it, no, it's not $1 a share. Sorry, it's not $1 a share. It's 20 cents a share. So you would see cash flow of 20 cents a share, and at 7x, it's worth $1.40. Let's do it that way. It's so much simpler to see. If Railtown can do 50 million in annual recurring revenue for a long, long time, and there's 250 million shares out, it's equal to 20 cents a share in cash flow. Just from that one source of revenue, 20 cents a share. If you pay 7x for that, which I think is very low, the stock's worth $1.40. If you pay 10x, the stock is worth $2, and it's right now trading at 34 cents. If you look at SoundHound at, let's say, a 30 multiple, it was 35. That's a $6 number. If it's equivalent to SoundHound, $6 number. If it's equivalent approximately, because I don't know, none of us do. If it's equivalent to the Langchang number, it would be 80x. Of course, we don't know what their calculation was as they were projecting revenue for the rest of the year, but based on their annualized revenue that was disclosed in the article I showed you, it was 80x. That would give you a target of $16 a share. That'd give you $16 a share. How about just 12x, 12.5x, 12.5x? That would target $2.50 a share. That's just from one source of income. $2.50 a share. Obviously, if you use 25x, it would be $5 a share. I don't think you should go much higher than that, than maybe 25, 35, maybe 50. I mean, if you went to 50x, I guess it would be $10 a share. Something in that range, 5 to 10. I think you can do. I wouldn't go much higher than that because we don't know the rate of growth of this revenue. It'll grow rapidly, maybe 30% a year, 40%, but I'm not sure it'll grow at 200% a year. So I'm not sure it'll justify 200x. But what I'm trying to show you from one source, 50 million in revenue, just from revenue sharing at 12x, using 250 million shares outstanding, 20 cents per share in cash flow. At 12.5x is 250. At 25x, it's $5. At 50x, $10. I think I would go with the SoundHound valuation somewhere in the middle. 6, 6.5, 7, 7.5. That's just from this revenue source, which is essentially guaranteed. They're already paying it. I don't care how crappy the websites are. I don't care how negative people are about Corey's leadership or whatever. That revenue in the networks is happening now. All we really know about in the presentation, I'll show it to you. I'll show it to you. All we really know about is 125 million. But is it fair to extrapolate? I think it is. Well, I can't find it, of course. Of course I can't. It's in this presentation. I'll just go one page at a time. Let me see if I can find it on the, let me see if I can find it in my photos. It'll be clearer anyway. Here it is. It's clearer anyway to show you. So here's the, well, this is unrelated, but these are the areas where Railtracks works. It's in the presentation. Build and publish. So you've got Railtracks up here in the building, the deploying, and then the observing, and then the publishing. I don't exactly know what they mean by publishing. And then this is the revenue sharing deal. This shows 180 plus affiliates. Elsewhere in the presentation, it shows 160 plus, but anyway, you get the idea. And so you have the affiliates. They use the Conductor platform, five different products, and it's placed in between, or it's a tool that interfaces with the TELUS Sovereign AI Factory, and you have the shared revenue computing revenue sharing there. And then here, over here, it says 170 affiliates. It gets confusing in the presentation, but there's 5,000 end users. It provides the ability to scale quickly. And then here in number 6, opportunity to move acquired and non-acquired affiliates who currently spend approximately 120 million per year to TELUS. I mean, they don't name it, but it's to TELUS. This revenue is known, it's visible, it's predictable, it's recurring, it's growing. It says it right here. Scale quickly, cross-selling. This is there for you to see. And all you're looking at is the manipulated stock price because the buying hasn't shown up yet. And the shorts just have to push. Their goal is a short-term window. Let's just push our bet for now, and we can book a teeny tiny profit. But when it's calculated on money we've borrowed, it's almost infinite profit. It's completely different than what I suggest your window should be. Your window should be until the curling, the National Curling Championship, which ends January 11th. And I think the stock will be $5 by then. All right. I wish I hadn't made that arithmetic mistake, but you see what I was trying to do. Let's go through your comments. Oopa, 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 pa. Oompa, 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 pa. Finger is down 5 cents to $1.30. Genius is down 6.5 cents to 73 cents. Bank of America, why do I have it? It's down 10 cents, 53.5. G-Bucks is down a penny at 10 cents. And Railtown is down a penny and a half at 34.5. Volume is 208. It's not much volume. And yeah, let me go through your Marco Flug. Hello. How are you, Marco? T. Alex, hello. Third, yeah, but first in our hearts. A lot of people are first in our hearts. Hey, Steve, hope you got the Venmo. Thank you for all you do. I didn't look yet, but I'll look after today. I really appreciate it. I'm sorry, guys, to ask, but I got to pay some bills, and the most critical is to keep this all on. I think the next 2 weeks are critical, and I appreciate it very, very much. Very, very much. Silver Skyrocket, hello. AC Stocks, I bought more this morning. Bravo, bravo, new bravo, new bravo. Venmo doesn't work in Canada. Well, the only other thing I have is Zelle, but Zelle is hell if it's not set up already. So I appreciate the thought. Don't worry about it. I mean, there's also YouTube, but they take a cut. I appreciate the thought. Look, I'm kind of embarrassed to ask anyway, but I really do appreciate it, Silver. Jack Hamilton, good afternoon, William. I feel as others do. Thank you for time and effort. What is the best way to contribute to your continuing efforts? I don't know. Go see a priest. That right there, I think, is the best way right now. I'll leave it up for a second. I'll leave it up as I look for news on how Railtown is trading in Canada. Of course it's down. Why wouldn't it be down a penny? Just never ends. But the chart's looking better. The chart is looking better. But man, It's down half a penny. 70,000 shares. My opinion is they're gonna really get aggressive. We'll talk about all that in a second. Anyway, thank you, Jack, for mentioning it. Silver Skyrocket. Thank you, Silver Skyrocket. I really appreciate it. Really appreciate it. Yay, yay. Eddie Eagle. How are you, Fast Eddie? Yeah, that's exactly right, Pete. I couldn't describe it better. Pete, the Greek, I assume. That is exactly right. They can't talk, they have to follow the rules, but the systemic selling, which is in this confusing area where they're breaking the law, but the creation of derivatives and the creation of hypothecated shares is legal because of Bill Clinton. So I think it's clear as it can be that they're breaking the law. But it's allowed. And you're exactly right. I couldn't agree with you more. But anyway, it's going to end. And it gives us the opportunity to build this position and add to our positions. This is the buying opportunity. I have a lot of people upset with me. They bought a year ago. They bought 7 months ago or whenever it was, 5 months ago, 4 months ago. You're able to buy right now because of the dearth of buying and the onslaught of selling for reasons discussed. You're able to buy the stock right now without the opportunity cost, without the time delay, without all the frustration. You're able to buy the stock at a 50 million market cap. It's incredible. The price is wrong. The price is wrong. 50 million market cap? They're going to do 50 million in cash flow. If you use the finger motion model, finger motion basically trades at 2 times revenue. Of course, their revenue is disclosed. That's a difference. That is the difference. But it's also disclosed that they're losing a manure load of money every year. So Finger's going to have to raise money, by the way. And I bet they do it before the end of the year. And we'll see if they do it at the market, above the market or below the market. My money's on below the market. But that's roughly 2 times revenue. Well, if you give, here's where you have to make an assumption. You just that one source of revenue from hosting grows to 50 million looking forward for 12 months. At some point, let's say by the end of the first quarter, midway in the first half, they can project 200 million in revenue coming there, and you multiply it times 2, the stock's 75 cents, 75 cents. There isn't any risk in Railtown stock here. You know, if we're talking under the cone of all being investors, all investments have risk, all, you know, the extraneous things. We could be hit by a meteor. World War III could start. You know, the dollar could be exchanged for rupees. Who knows? But all things being equal, as compared to other stocks in the AI and the software space. Where's the relative risk in Railtown? The stock is trading as if it's predicting if you use a 50 multiple, they're going to do $1 million in revenue next year. If you use a 25x multiple, the stock's trading as if they're going to do $2 million in revenue next year. They've already announced 7 or 8 revenue deals. Of course, they didn't tell us the revenue. They've acquired AIP property network. We know this hosting revenue's coming. We know it's coming. This stock is just so cheap, I can't even believe it's sitting here. There's a lot of anger. I get it. People are mad at me. They're pissed off at me. I'm flying blind. I don't have information. Corey sucks. His leadership sucks. I don't trust it. Technology is a fast-moving place, and obviously, because it took so long to acquire AIP, they missed the boat. I get all that. But is this the right price? 50 million market cap in a world where Langtrain's trading at $1 billion? Where SoundHound's trading at 5 to 6 to 7 billion, depending on when you look over the last 2 or 3 weeks. Guys, this is so cheap. Railtown is it's just sitting there for you to pick it up. Of course, I can't. I don't have any money, but good gosh. All right, let's keep going. Thank you, Jack. That's awfully kind of you. I appreciate it. Appreciate it. In Alabama, there's a song about my mama from Alabama. Some guy that used to be on the Jack Benny show would sing. I didn't understand why he was such a star. It's kind of a goofy, but he's a big guy. But anyway, thank you very much, Jack. Neil, good morning. And fellow Railtown investors. Wow, I don't know where you get that information. So on the Canadian Stock Exchange and the automatic trading system, ATS, the table is set 200 shares traded. That's amazing. In 2026, the second TELUS AI data center in Kamloops, Quissimony and Kamloops. This is going to be written up in Field and Stream. That's a joke that I heard Norm Macdonald use, but I think he got it from Rodney Dangerfield. I thought it was funny when I heard it. I used to read Field and Stream. When I lived in Vermont, there wasn't much else to read. The Farmer's Almanac, Field and Stream, and Reader's Digest, and the back of a cereal box. It wasn't great. Wasn't a great selection. But then I got to the library downtown, and I guess it shows how happy my experience was, but I read a hell of a lot of books out of the Carnegie Library downtown. Thank you very much for that, Neil. T. Alex, received my Friday voting instructions for Railtown. Proxy deposit date is December 15th. In other words, you have to vote by the 15th. You know, it'd be a real test. I've raised my voice a bit because I don't know how the microphone's going. I should lower it. But it'd be a real test. I wish we could measure it a bit. Because who's going to vote all those counterfeit shares, you know? But I don't guess it's going to matter. T. Alex, annual meeting is Wednesday, December 17th at 11 p.m. Suite 480, 580 Hornby Street, Vancouver, British Columbia. Yeah, I'd like to go, but not if it's just a roll call meeting. I wouldn't mind going if I can have dinner with Corey or if I can visit him or take a tour of the software. Maybe I can go in and write code. They can show me their English to code booth, and maybe I can write some code for their attorneys. That'd be a useful thing. Brandon Neely, wow. Brandon, that's amazing. Good for you, Brandon. Bought 70,000. That's great, Brandon. I really commend you. And why wouldn't you, right? I mean, the stock is trading. Let's not talk about stock price. Let's just talk about the market cap. The market cap is $50 million. I just showed you simple assumptions that they've disclosed 120 million in hosting cost / revenue. It's a cost, but if they move it to TELUS, it becomes a revenue. And that's just from the existing 170 companies, or 160, 180, I don't know. But if you assume there's some growth there, and maybe it goes to 150, projectable, that's the key. It just has to be projectable. 150 in revenue from hosting from that network of companies. Remember, it's growth in revenue. It's the number of companies has grown, and it's the number of companies will grow. So that source, I think you could come up with 150 million. I'm not saying right this moment. I'm saying projectable, let's say, by the end of the first quarter, the next 12 months. And not that they have it all transferred, just that they can show it will transfer. Because once it transfers, that revenue lasts 10 years, 20 years, 30 years, 40 years. That's one source. And then the TELUS, it's in the presentation. I don't think I have a clear copy there, but it's clear that TELUS intends to cause a subset, maybe small, but remember they have a big set of users they're going to direct their business to Conductor, which will sit atop TELUS's data center. Why would TELUS do that? Because they want to offer a competitive, actually a superior product to the AI companies and software companies and telecoms who are going to come host on TELUS. So there's a whole new hosting revenue from TELUS's ecosystem. So you've got the AI network, you've got TELUS, and then you've got all the business Railtown's going to bring in on their own from their enterprise sales agreements. There's 2 out there we know about. There's digital they brought in. I think that's 14,000. So I don't know how many would actually come over, 10 or 20, 100, I don't know. And then there's Uniserv, 3,000 enterprises, 30 come over, 100 come over, 300 come over. But you have those you know about, but then they're out marketing their product. So I think it is reasonable to project 200 million in hosting revenue for TELUS, shared by Railtown at an eighth. And I'm sorry I screwed up those numbers. I'll redo them for tomorrow. But that means 50 million in not only high margin, all margin. It's just like a referral fee. How much does it cost to collect a referral fee? You got your accountants, you got somebody, I guess, taking the check to the bank, but it's all electronic. There's no cost. So you got 50 million projectable, I think, conservatively, from some point next year, going out 12 months, 50 million in projectable revenue. Pick a multiple. Pick a multiple. It's trading at 1 times, a little over 1 times right now. Look, the number of shares outstanding, the reason it's trading at 34 cents right now, the number of shares outstanding they use is around 143 million. I'm using 250 million to account for the acquisition, to account for other things. So that's where it's 20 cents a share. But this company is trading at a market cap equivalent to its cash flow, projectable cash flow at some point next year, which is 100% margin. Their revenue, 50 million in revenue, you can project, I think, conservatively. And that's what the company's trading for right now. Incredible. Absolutely incredible. Absolutely incredible. And that is the mispricing caused by the corruption of these markets. And it works to they're rational. Those shorts are rational because their goal is the next 5 minutes. Their goal is the next half an hour. Their goal is by the end of the day. And then the swing traders, their goal might be by Friday. Just keep pushing, pushing. And remember, they're using borrowed money and non-existent shares. And they're doing it across hundreds of companies. It's such a great scheme. But that's their short-term goal. And there's no countervailing buying yet, in my judgment. And of course, I can't prove it. I do not believe there's a leakage of information to buyers so they can cheat on the buy side. I know the argument. It happens in New York. It does happen in New York. Ham's told you about it. He used to get a trade from Steinmetz used to be a client of mine. Michael Stein, whoever, call in with a big order. He'd say, hey, watch my phone. He'd run out to the graveyard behind that church down at Wall Street. I've been there so many times. Right now, I can't remember the name of that church. But he'd run to that graveyard, meet somebody. Hey, Blue Star likes blue sky, or whatever the expression was. So there is cheating. But I would submit to you that in New York, in Canada, There's not enough people who know this story or even would cheat on this story. That's how early it is in the story. That's my opinion. That's my opinion. So you're paying pre-seed money or even seed money, but I think pre-seed to get into this stock. And how long does it take before the buying shows up? We might be a week away, but we don't know that. It could change tonight. It's going to change. And once it changes, you're not going to see 35 cents. You're not going to see $1. I know I've said it before. I get it. But the key difference here is the deal is closed. And they came in under budget in terms of the number of shares. Brandon, congratulations. I commend you. If I had like a, some sort of trophy, I'd give it to you. Richard K., good morning. Good afternoon, William and Lucky. Yeah, he's the best boy. He's the best boy. I miss him. Average down, good for you. And looking forward to the day I can average up. Bravo. I like that as well. It doesn't look like I'm going to be able to buy any. I'm not complaining. I'm very grateful for my small position. I am grateful for it. But I agree with that attitude completely. To buy as it goes up will be a great experience. Hey, Dale, just dropping in to let you know. Wow. Dale, thank you very much for letting us know. Just dropped in to have a cup of coffee, friend. I just dropped in to have a cup of coffee, friend. That was Johnny Cash song. I don't think anyone knows. Flo was giving him coffee. Old Flo. T. Alex. Corey Brandolini is portrayed as capable and visionary leader who has achieved significant milestones. I think Corey's doing a great job, Alex. I'm just giving you the feedback I get from some people who are in their frustration. They're just blowing off steam. But I think Corey's done a great job. What we don't know is what has he done to develop this product. We do know that I think he's created. Do you remember that chart where they had all the layers of other applications and he went in vertically against it? I think his is something that they all can use, which is incredible. Not the apps, but developers. So in other words, developers using those apps would layer in and benefit from Railtown. It's incredible. And that's where Corey and Marwan and their whole team deserve kudos. Yes, I would, I really can see the argument, and I've expressed my frustration that you're right, you're bloody well right. What's the rest of it? I don't have a lot to say. Well, you're right. You are right that I think Corey's skills are exactly where we want them. If I had a CEO in the software development space who's a visionary, solves a problem, and does it before anybody else, using AI 2.0 before the chips and before the data ready to go. I'd rather have that skill than filling out forms for the regulators. Regulators and bureaucrats take their sweet ass time, and there's nothing anybody, an engineer, an entrepreneur, a wealthy person, a lawyer, a team. There's nothing anybody can do to get a regulator to giddy up. You can't get them to giddy up. So I don't blame, T. Alex, just so you know, I don't blame Corey at all. I do wonder somewhere in there might be somebody to blame. And of course, the buck stops at the top, but why blame anymore? It's over with. It's over with. The long, painful wait is over with the caveat, or with the adjustment, that I'm not sure that my word quiet period has ended. The quiet period might be dependent on TELUS explaining the revenue deal, for example. Well, TELUS is like socialism. It might as well be a government organization. It could take a week. I hope it's done before the annual meeting. I think it will be. I don't even know if it'll take a week, but it could for TELUS. For research might have to wait for TELUS. So the whole thing, my whole point, T. Alex, is who's going to buy right now? There is an argument that somebody must know, and so they'll cheat and break the law. Yeah, maybe. But I would argue that most of the people that know are so close to the companies that if they cheated, it would be traced. It would be traced. I don't think there's a lot of cheaters out there. And then I just wonder, even if at this point you gave some whispered news, I don't know, to a trading desk at TD Ameritrade or something, or at Fidelity or something, I don't know that they're going to act on it, because the stock price, they all look at the same way. It's under $1. It's, so I'm not sure the argument that whispers are going to get the stock up. I think this is different. I really do. And it's good. It's fine. We don't need rumors. So, T. Alex, my suggestion is, absent some other revenue deal, something, unexpected, that TELUS could take another week or two. They're communist. And research, therefore, could take up to that time frame before, using my word, the quiet period is over. I love it. You and I know that they did acquire AI partners. We know this revenue I just told you. I think you could project it at 50 million. If you don't want to do it at 50 million, maybe you want to do it at 37.5 or 35 or 30, but maybe you don't want to use an eighth. maybe you want to use 15% revenue share or 17.5% revenue share. I mean, I think 50 million is entirely projectable just from hosting revenue, 100% revenue at some point next year for a forward 12 months. So this gives us a chance to build our positions. It's exciting. It's not something we should be feeling tension about. We should be excited. I know that's trying to find silver in the sow's ear, or however the expression goes. But that's how I'd look at it. We now know for a fact they did buy AIP, and they didn't even pay 50 million shares. They paid 49,720,000 or whatever it was. T. Alex, industry expertise. Brandolini and his co-founders possess a collective 30 years of experience in building software. Exactly. Excellent. Which forms the foundation of Railtown AI solutions and strategic partnerships. Under his guidance, Railtown AI has formed key partnerships with major entities and research institutes, including Microsoft, Amy, Mila, and TELUS. Exactly. And we should give credit, I think, to the whole team, which he's drawn together. There's no question that Marwan is there because of Corey. Dr. Elliott is there. Sounds like Ramblin' Jack Elliott. Dr. Elliott is there because of Corey. The software engineers are there because of Corey. John Ruffalo and Dr. Tom Core and Mike Norbrega are there because, you're exactly right. You're exactly right. Brandon Neely, what is your prediction on 3:50 p.m. ICE now that we are in December? I guess you're saying, when do I think it can get to $3.50? I tried to do that exercise yesterday. I like your question, Brandon. Let's go through it. So here's I might even have typed this up, but let me just read it because I don't trust now. I made that mistake. I don't trust my own typing. Today is December 1st. So I made a projection that today TELUS would tell us that what the revenue sharing deal meant. But guess what? It didn't happen today. But I would say that will happen prior to the annual meeting. So I give that revenue sharing announcement the potential of adding, I'm trying to be really conservative, 15 cents to 25 cents a share. Very conservative. I wrote down that we could see some new deal. I don't know, something. They sign up, another Uniserve, or they sign up I don't know, a Canadian real estate rental company. I don't know, just somebody else. So I thought maybe they do that by Tuesday, and that could be worth, 25 cents. I'm talking about a good deal that we kind of get excited about. So combining those two, I figured that by the middle of the week, we could be to $1 a share, give or take 25 cents. However, if I wrote this up right now, I think I would predict TELUS for next week or the following week. I just don't trust them. And then I added that by December 4th, we could see Research Capital's report. And that got me to $1.50 plus or minus 25 cents. The key is, though, Brandon, I think that the research and these prices over $1 are going to be dependent on TELUS telling us about the revenue sharing deal, which my gut right now, because they are communistic, I think it's going to take, I don't know, 1 or 2 weeks. It could take the full 12 days to get that out. And that would be a sign of Corey's ability to work with TELUS. And my understanding is, unlike me, Corey doesn't make enemies, and he's very good with people. So if we can assume TELUS comes out maybe mid next week, what day would that be? That's the 10th. How about if we say TELUS might come out by the 12th with their description of the revenue sharing, which I think they owe us. If, and this is a big if that's the final release of the quiet period, I think you could see research Sunday night or Monday, the 15th. Maybe by Tuesday, the 16th, you'd have research out. Then you'd have the annual meeting on the 17th. Depending on what they do with the annual meeting, if it's going to be a full-on presentation, you might see a new corporate presentation available by the 17th, research on the 15th or 16th, TELUS on the 12th, maybe on revenue. They might have other things to say. And then maybe some other research coming out the 18th or the 19th. Brandon, I don't want to say it's impossible to get to $3.50 by the end of the year, but I would say that a December target of $1 to $1.50 is more conservative, and based on the fact that we're waiting on TELUS, waiting on research, maybe waiting on revenue deals, maybe $1, $1.50 is a more achievable number by Christmas time. And then you got the holidays. I would say 350 by the National Curling Championship. 350 by January 11th. Let me see when January 11th is. $350 by January 12th. That's Monday. That's when I would say. So I'd say basically a month from now, 6 weeks from now, you'll see $350 a share. But you could easily see $7 or $8 a share by then if Railtown's revenue projections are shown to analysts and believed by institutions. You just need one or two institutions to start buying the stock. A Mavericks, a family office, a wealth advisory firm might put it across its clients. You could see the stock $3.50, $5, $6 by the middle of January, I think, and that would be in my judgment, once it gets to 556, 650, I think the stock could be $10 or $12. Compared to how long it's taken for us, it could be to $12 very, very quickly, because institutions will come in. And one of the predicates for getting to that price will be visibility of revenues and it will probably be given a low multiple at first. But as the story gets out, the multiple will expand. And then by that time, maybe the revenue targets will expand as well. I think it's going to be very exciting January, February, March. I know it's a pain because that's next year, but that's the situ. That's where we are. That is where we are. 34.5 right now, 230,000 shares. But we had 12,000. Was that a sale or a buy? Yeah, that was. It looks like a buy. 12,000. Obviously, every trade has a buyer and a seller, but I think it was a real buy at 34.19, 5,000 at 34.04, 2,000 at 34.04, and last trade, 105 shares at 34.17. Fingers down 2 cents at 133. Genius. I can't wait till that falls off my screen. 70 down 5 cents at 74.64. Bank of America down 29 cents, 53.36. G-Bucks is down a penny at 10 cents. And Railtown is 230,000 shares. Freddie Flint, what happened? I don't know what you're talking about. All right, Freddie Flint, guess what? I've changed my rules. I've changed my rules, Freddie Flint. You are banned and deleted. I don't want to impose. I don't want to impose on everybody. Your shillness. So let's go back to Brandon. If I had to predict when will be 10x from here, I'd say by January 12th. And you've seen how accurate I've been. But I think now that the deal has actually closed, we're not dependent on bureaucrats at the regulatory office, and we're not dependent on the bureaucratic thinking or the different kind of thinking at law firms. So, it should be good. Should be good. Julius, I pray that this price stays until I get paid tomorrow. Amen. It looks like it will. We've only got an hour and 15 minutes to go. Right? Yeah, so it should stay there. D, thank you for your positive support, D. Gary Dale, William, I just sent Venmo. Thank you very much. New total for me is 125. That is awesome. Gary Dale. Hilly up, hilly down, all the way to Allentown. I guess that doesn't have anything to do with the Dale. All right, Gary Dale. 125,000. Bravo, bravo, bravo. That's awesome. Thank you very much for helping out. T. Alex, Fred Flint, sounds like you choked on a big one. Go. Oh my gosh, I'm not going to finish that. Quit that. Thank you, quit that. Thanks, William. Oh, it's Clay. You are first class, but as a side note, I think you are underestimating, timating the extent of the short interest. Oh, that's just one long word, underestimating the extent of the short interest. Yeah. Clay, that's because I really don't want it to be a short squeeze, but it is possible. It is possible. I don't want it to be because of two dynamics. One is in the human mind. If the stock just suddenly starts soaring, we're going to treat it as hot money. Oh my gosh, we better sell. And I think at certain prices, who's to argue with that, right? But who knows what that price is? So that brings up the second dynamic, which is and it's hard to quantify the second dynamic. If whilst this stock price has been down, some of the bigger players have been accumulating, which we don't know, they may have been. Or if they're able to accumulate over the next few weeks before there's a squeeze, they'll be in it. They won't sell. They won't sell into a squeeze. They're in it for they're not here for those short-term gains. They're unlikely to sell into a squeeze. But if, as the stock has a squeeze quickly, which could happen, a lot of those major players may not have established their positions. They'll be on high alert. So as people's view changes from sort of an investment to hot money ideas, I better sell, I think a lot of institutions will be buying the stock. When I show you the 50 million in revenue just from hosting, institutions are going to be able to extrapolate the kind of revenue Conductor can give. I acknowledge the negatives. Maybe Lang Chang beat them to the punch. I don't think so. I think they address different markets, but I don't know. I'm not an expert. Or maybe somebody else's technology has accelerated while we were waiting for 10 or 11 months. It's possible. technology moves at a completely different pace. But I don't see that, luckily. Luckily, I think the storm has passed. So my point is, there will be institutions out there. Perhaps they'll have uh, uh, similar, maybe somewhat better information than we do. But you know what they'll have? They'll have internal research analysts. They'll have internal modeling. They'll have studies they paid for how the industry is going to be. And they will have perhaps tens, if not hundreds of millions of dollars they want to get invested. So the second dynamic, which is why I'm afraid of people jumping out in a short squeeze, is the stock may not pull back as much as you think. But even if it does, these volumes of shares that are currently available, because there's just a mimeograph machine turning, they might take that template away and turn the machine off, and you might not be able to get back into your position. So obviously, it's crazy not to trade a huge run up, but does it make sense to trade a moderate run up? I don't know. And we'll have to play it by ear. If I could put it in a dollar example, I think Microsoft is my favorite buyer of Railtown, simply because Corey has sold or been involved in a sale of a company to them before. Currently, Microsoft has a $3.6 trillion market cap. I think Microsoft would pay $36 billion for Railtown conceptually. And I know you think I lost my mind right now, but that assumes high multiples. That assumes they can get to, I don't know, 100, 150, 200 million projected revenue. And it assumes maybe a bidding war. And it assumes Railtown really is first in class, first to market, and that there's an arms race going on. So it's at least conceptually possible that Microsoft will want to own Railtown. Well, 1% of its market cap right now is, $35 billion, $36 billion. I think that's totally plausible as an all-stock acquisition. Now, it maybe I'm aired way too high, but if it's that number, and if they approach, I don't know, approximately 350 million shares outstanding, which I don't think they necessarily will, that's $100 stock takeover. But it's tax deferred. It's without having to pay taxes. You just get Microsoft stock. So you could argue that I'm being overly optimistic for what Microsoft will pay. That's fine. I'm just trying to come up with a number of a potential exciting price that Microsoft might pay. Maybe it'll be less than that. But so one place to start in a short squeeze is the absurdity of it squeezing above $100, I would have to say, that's probably getting in the range you should take. That's kind of a definite area. It goes to 125, goes to 130. It seems kind of like a gimme. So what do you do between $50 and $100 if it even goes that high? I would say that's more in the push category, because if you want to own it long term, and if you want to get back in, it starts to be a little unknowable if you can rebuild your position. But it's not a bad decision to sell in that range, because there's no idea that Microsoft is going to pay, in my example, $100 a share. So that gets in that whole broad area of tough call, but you probably can't go wrong. But what if it squeezes, so-called squeezes, to $15 or $20 or even $25, and your urge is to sell, which may be the right one. I'm not saying so. I'm not saying it's not. But if you sell at $20 and institutions think it's worth $60, and so you sell and it's institutions buying, and maybe it pulls back a little bit, but you're waiting for a pullback to $12 and it pulls back to $16, and you can't quite judge it, you run the risk not only you're unwilling to pay $16, but also there might not be as many shares available. It gets really tricky. Should you sell your stock if it so-called squeezes to 15 or 20 or even 25? My sense is you shouldn't sell at 15, 20, or 25. And maybe it's an easy call to sell above 100 something. But that in-between area, it gets complicated. And I don't know my feeling right now. I hope it doesn't happen. But if it does, I think it's all good. I think it's all good. It'll bring a lot of attention to Railtown worldwide if it goes, into the 30s or 40s in a squeeze. It could cause the I don't know. It could cause a group like I personally don't think Corey will do a deal with criminals, but it could cause a group to come in with some financing, and that might make sense at those levels. But it could put the company in play as well. It could bring the attention of the company to investment bankers worldwide who have portfolio companies that want to acquire Railtown. So I think it'll be all good. It'd be all good. And I think you do make a good point. The last number I saw was 52 million, but that was a number from about 90 days or more ago. It could be a lot higher now. And it did not include Canada. It did not include Canada. So I think you make a good point. Yeah, hi, Clay. I don't know how the change. I don't know how it happened either. My small contributions are conditional. You must stop interacting with the shills. I just blocked one before you told me. Do you give me credit for that? Do you give me credit for blocking one of them? Please, at least the ones that post a dozen comments in a row, please, William. I beg you. I just did. I've changed my policy. Maybe you're the one that made me do it, but somebody did. Somebody made me think about it differently. I'm not going to read through all the questions all of their comments anymore. As soon as I sense it's a shill, I'm going to block them. So I may make a mistake now and again. I may block somebody that's not a shill. I hope not. And I may talk to someone who's a shill who I think is real, but I hope not. But I'll do that, Clay. Thank you again. All right, that doesn't give me a good feeling about that person. T. Alex Corey B has led the company through key initiatives like the commercialization of new developer frameworks and the acquisition of AI partnerships. Yes, all of this will drive growth, expand market share. I agree with that 100%. What would I consider to be a huge runner? Cutting to the basics, Eddie, what we're looking for is the shorting, the selling of non-existent shares to stop or dry up. It doesn't completely have to stop. And we're looking for buyers who come in, who put the stock away. They buy it and they're going to hold it for 5 years or 10 years. And I think that's coming, by the way. I think the stock is going to go over $1 by the annual meeting and maybe $1.50 by the annual meeting. I'm so hesitant because every call I've made since June, well, in the early stages, maybe I got a couple correct, but I didn't get anything that mattered correct. So I'm so hesitant that I feel like I'll be wrong. But you know what? That's usually a sign that we're about to turn. So, Eddie, I would say a run to $1.25, $1.50 would be a big number over the next 2 weeks. If that triggers some buying from institutions before the end of the year, which could happen because they want to start next year with a good portfolio and they want to be able to beat their competition next year. I think it could be $3.50, $5, $6, $7 by the middle of January. And I know I've said all that before. But as awareness comes that Railtown is better than Langchain, which I think it is, and that they have a certain amount of revenues locked in, and I would submit that they're not going to do any roll-up of the network companies until the stock is $5 or higher, pick a number, and they don't need to do any financing. I think the stock will accelerate to the upside. My guess is by January, February, March, they won't issue shares. So a conservative number to use, let's say, is 250 million shares outstanding. If they go, in the market's mind, to a $2.5 billion market cap, it's a $10 stock price. And you can play with that one side or the other. I think their number of shares outstanding right now, adjusting for everything, is probably around 230 million shares, not 220. But we'll learn that. That's something we'll learn with their financial reporting, which is due anytime now as well. I hope I answered your question. Clay bought some shares. Good for you. Good for you, Clay. I'm jealous. I'd love to get to that number. That's great. We've got to be positive. We've got to be positive. 249. And Clay gives me credit. All right. It's 305. Everything's red. Railtown's down 2 cents. Again, I believe the stock price is telling you nothing. I know nothing. I don't even think the lower stock price is telling you that there's somehow, if there were good news, there would be buyers out there. I don't even think that has anything, doesn't enter into it. So it's just a great opportunity to accumulate this stock. I mean, I literally, I accept the criticism of me, particularly for people that listened to me from the beginning, like November, December, January, February, this past year, and even from January, July, all that. I wish I had known. I'd be telling you to buy it now. But, a lot of that's hindsight. But I'll tell you what, for people that can shake it off, and I'm not good at shaking things off. I do a lot of looking back and getting angry and pissed off and all that. But if you can just look at it coldly, you're buying this cheaper, not only than a year ago, you're buying it at the same price or slightly less expensively than I paid June 5th. It's bloody cheap. And I don't, the only reason you'd hate it here is if you think they lost the technology race. I don't think so. I think they're on a different track. Sorry. And they're better. You would argue that they did toxic financing. Well, obviously they didn't. They closed the deal without it. You would argue that the deal's not going to close. Well, the deal did close. You're going to argue, well, they don't have any revenue. All those network companies are all crap. Well, they're not. You can Google them. They have revenue. But we know from the presentation that they spend $120 million on hosting. We now know that's going over to TELUS. Some number. I just, guys, girls, kitty cats, puppy dogs, horsies, cows, goats, little birdies. This stock is cheap. Cheap, 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 cheap. It is really cheap. And one thing that's hard to understand, It's how stocks get overpriced and underpriced in the market. And it's why, specifically in this case, the price isn't telling you anything. The automatic selling, the computerized selling, the people behind it, they have a vested interest in pushing their trade. They can cover in the dark pools. They can move their trades offshore. And who knows? They might have people, cohorts in the regulator's office, in the attorney's office, that help slow everything down so they have time to move everything offshore. It is a sting operation, and it's really sophisticated. And we don't know all the moving parts. We really don't know all the moving parts. So I mean, look at it a different way. Look at on the bull side. When people buy into, I don't know, Facebook, which is a great story, but they lost a lot of money, it looks like, in their meta bet. And they haven't really had success outside of stealing a roommate's idea in a dorm room. It doesn't look like Zuckerberg's really had, I don't know, it's probably more complicated than that. But the stock keeps going up. Well, you've got ETFs that reinvest, retirement plans that reinvest, but you've got day traders. They see the stock and they day trade. They buy 1 million shares, 10 million shares. All they need it to do is go up another eighth, go up a quarter, 3/8, and they have a huge trade. They don't care about the fundamentals. They don't care that it's overpriced. They don't care that the multiples are out of whack. They just want to play the trend. And the trend in these stocks, when there are no buyers, and that's all of these stocks, unfortunately, no research, no trading desks, nothing, and they just can sell endless amount of shares that don't exist, the trend is down. So all they got to do is press the trend a little bit lower. And if they get lucky, they'll hit an air pocket. But it doesn't matter if they don't. They just got to get it down. And they'll book a teeny. You know, they'll book small, tiny trades. They'll do it with the dark pool somehow. I don't know how it works. All they got to do is net their trades at the end of the day. And it helps if they can scare you into selling real shares, because they can factor those trades into their netting at the end of the day. And I don't know, with Railtown right now, the volume in the United States is 250,000. The stock is down 2.25 cents. If somebody out there can get 100,000 or 150,000, maybe, back and forth, Flash Boy style, they can collect 2 cents net on 150,000 shares. They make $3,000. And it has nothing to do with the fundamentals. It has nothing to do. They know, they can tell for today, they're not really taking a lot of risk. And so they make $3,000. It's better than driving a load of hay across the back roads of Ohio to feed the horses. It's better than trying to sell used automobiles. It's better than painting houses. It's almost better than going to your office and being a surgeon all day. $3,000 is a lot of quid. And that's all the stock price is telling you. They've stretched the rubber band so far down, but they're willing to stretch it further as they pick everybody's pocket. And they'll take that money off the table. Probably what's going on is like Ionic did with Logic. Probably there's a lot of this flash boy back and forth. It's still illegal, but they'll settle up at the end of the day, and they'll only have exposure for, some much lower number. I don't know. I don't know their overall methods, but all I'm trying to express is their goal is to take $3 grand, $5 grand, $2 grand out of the market today. It's completely different than your goal. Your goal is to be here when finally, my word, I apologize, the quiet period really ends. There's enough news that ends the quiet period. There's some research, and the buying begins. The real buying begins. All you need is 2 buyers. You just need a Mavericks and an Omers and a Merrill Lynch AI asset trust bust fund with an equity kicker, and you're off to the races here. But for now, the guys, and it's computers that are doing this. It's not anybody sitting there. They're not bright enough. Nobody is. But they've got the computers set on steel. They'll turn those computers off at some point. But in the meantime, it gives us a chance to buy. All right, so that is the last comment. And I'm going to put up, Ward sent me answers. I think it was to Brandon's question. Which I'll go through. And then Ward sent me 2 articles, which are great. I think I read them to you before, but what's great is I don't have to go look for them again, and I'll read them. It's good to update our thinking. Ward sent me this. Can Railtown's AI software make a data center run more efficiently? Or a woodchuck chuck more wood than a woodchuck could chuck if a woodchuck used AI? Yes, Railtown Stack is not a whatever the hell DCIM tool, but its observability and agentic frameworks can make a data center run more efficiently by reducing incidents, improving software, and AI workloads running inside the DC, whatever the hell, the data center. And via the network, I guess, optimizing how compute is provisioned and used. Where Railtown helps efficiency, application and agent efficiency. Conductor. So it's spelled conductor, but the branding is conductor. Gives a unified view of application and AI agent performance, aggregating metrics, logs, and events, and then generating, quote, advanced insights and recommendations to improve efficiency and reliability. In a data center context, this means fewer buggy releases, less thrash on services, and better tuned AI workloads that waste fewer tokens, CPU, GPU cycles. Faster incident resolution. Railtown's AI-driven root cause analysis works on top of error logs and dev tickets to pinpoint the origin and environment of failures much more quickly than manual triage. This directly reduces mean time to repair for application and service issues that otherwise translate into higher resource usage, cascading failures, and SLA penalties in the data center. Okay, a data center specific angle. Integration with data center ISP infrastructure. Railtown, using its agentic frameworks and observability tools, is being integrated into Uniserve's data center, ISP, and managed IT infrastructure under a MOU. Swell. Specifically to enhance how services are deployed and managed across roughly 3,000 small and medium-sized enterprises customers. This is a concrete example that it is tooling its intended. This is a concrete example that its tooling is intended to operate at data center and network scale, not just inside a single app team. Hey, good catch, Ward. That's right. Sovereign compute, gulp, and AI infrastructure. Through the AIP acquisition and partnerships like Digital, Railtown is positioning its frameworks alongside secure sovereign compute infrastructure and GPU capacity, aiming to better match AI workloads with the right infrastructure while improving commercialization and utilization. More intelligent placement and monitoring of AI workloads translates into better GPU, CPU, utilization, and energy efficiency at the data central level. What it doesn't do, okay, I'm not going to read it. How you would use it in a data center. Using Conductor as the observability command layer for app and AI workloads running in the data center, with its insights feeding into your SRE and DevOps process, and optionally auto-scaling and remediation automations. But see, it does have that layer application. Sorry, I jumped ahead. My eye. Okay, he asked, this is from Ward, he asked Palantir and Railtown, would they make a good match? A partnership or this is a question Ward made, it's not in the zeitgeist yet. A partnership or acquisition between Palantir and Railtown AI presents a compelling strategic alignment. As Railtown's developer-focused AI tools complement Palantir's enterprise-wide AI orchestration platform. Palantir specializes in large-scale data integration and operational AI platforms, Gotham, Foundry, AIP, for both commercial and government clients. Their value proposition is connecting disparate data, workflows, and human users to enable better AI-powered decision-making across an entire organization. They focus on high-level, complex use cases like supply chain optimization, fraud detection, and defense intelligence. Railtown AI Technologies. Railtown AI provides specific application-level AI productivity solutions for software development teams who use agile project management methodologies. Their tools are designed to streamline the software development cycle, the SDLC, by, and these are bullet points, automating root cause analysis, connecting ticketing systems, building servers, and logging services to pinpoint the exact code change responsible for an error. Generating documentation by automatically creating release notes and progress reports from developer tickets. Providing developer co-pilots by offering AI assistants, such as Conductor, to answer developer questions and by providing actionable insights for problem solving. Improve observability by tracking performance metrics, build status, and development quality to help teams identify bottlenecks and improve efficiency. Strategic match. I hate this word. The synergy lies in bridging the gap between high-level operational AI, that's Palantir, and the underlying software engineering processes, Railtown AI. It's pretty big. End-to-end AI lifecycle management. A combined entity could offer an integrated platform that not only manages AI operations at the enterprise level, but also improves the efficiency and quality of software development that builds and maintains these AI applications. That's interesting. So I guess Ward is thinking Palantir could buy them. Data quality and efficiency. Railtown's tools help create higher quality, better maintained application code and data pipelines from the start, which would feed into Palantir's platforms that rely on high quality data to train accurate AI models. Streamlined AI adoption. Palantir focuses on getting businesses to adopt AI at scale. Integrating Railtown's tools could make that adoption smoother and faster by providing better development tools and frameworks for the engineering teams implementing the AI solutions. So it ends with, while there are no public announcements regarding such a match, the technological overlap in improving efficiency within the AI software development spheres creates, I didn't copy it, but creates, a good company. Okay, and this goes to the gentleman's point that Corey's doing a good job. We now have 260,000 shares traded on Railtown. I would guess only about 5% of those sales are people selling stock, but I don't know. There could be hedging. The bid is 33.73 by 34.73.75. So they're trying to scare you. The last trade is 33.77 and the volume is 260,000. All right, let me show you what a stud Corey Brandolini is. Stud in the software development space. This is from Asia Pacific Entrepreneur. I'm not sure I read this one to you, but I read something like this to you. I just can't remember. But Ward sent this. This is from John Johnsch at Asia Pacific Entrepreneur, dated September 30, 2024. From legacy challenges to AI-driven solutions. So, based on their experience with software, this actually solves a software problem. The success story of world-class, rapidly growing AI tech innovator. That's Railtown. Now, this is a year old, so it does not necessarily answer, did Railtown fall behind technologically? I don't think Railtown did fall behind technologically, but we'll find out, I think, over the next 11 days. Today is gone. Corey Brandolini's journey in the tech industry spans 2 decades, over 2 decades, during which he has witnessed the profound impact of software inefficiencies on businesses, recognizing a persistent pattern of companies struggling with outdated systems and seeing escalating security risks. Corey was inspired to create solutions that would not only address these issues, but also propel organizations into a new era of efficiency and security. In today's rapidly evolving technological landscape, confirming that concern, but I also think these guys got ahead of it. Companies are often caught between the need to innovate and the constraints of legacy systems. The repercussions of neglecting modernization are evident in high-profile data breaches, infrastructure leaks, and crippling technical debt. At the forefront of addressing these challenges is Corey Brandolini, co-founder and CEO of Railtown AI, whose visionary leadership is transforming the way businesses approach software development and system security. Corey Brandolini's journey in the tech industry spans over 2 decades, during which he has witnessed the profound impact of software inefficiencies on businesses, Recognizing a persistent pattern of companies struggling with outdated systems and escalating security risks, Corey was inspired to create solutions that would not only address these issues, but propel organizations into a new era of efficiency and security. In response, this is the birth of Railtown AI. In response to these industry-wide challenges, Corey co-founded Railtown AI, a company dedicated to revolutionizing software development through artificial intelligence. Railtown AI's mission is clear: empower development teams with tools that proactively manage errors, prevent data leaks, and reduce technical debt. By integrating AI into the software development lifecycle, Railtown AI offers a proactive and intelligent approach to error management and system optimization. I think this article appeared in another magazine, which is where I read it to you. Anyway, addressing leaks, data breaches involving personally identifiable information have far-reaching consequences. The infamous Yahoo data leak serves as a stark reminder of the damages that can result from inadequate data protection measures. Millions of users' data were compromised, leading to a loss of trust and substantial financial penalties. Railtown AI tackles this issue head on with advanced data masking technology. By implementing data masking early in the development process and throughout continuous integration, continuous development pipelines, that's the CI/CD pipelines, Railtown AI ensures that sensitive information is protected from unauthorized access. This proactive approach significantly reduces the risks of PII leaks, safeguarding both the company's reputation and its customers' privacy. And then combating technical debt. Technical debt, the accumulation of outdated, inefficient code, poses a significant threat to businesses. According to a Wall Street Journal report, legacy software problems amount to a staggering 1.5 trillion US dollars, increasing the risk of hacks and operational inefficiencies. Railtown AI offers solutions to reduce technical debt by automating code reviews, enhancing code quality, and promoting best practices in software development. By addressing technical debt, companies can improve system performance, reduce maintenance costs, and mitigate security vulnerabilities. Preventing infrastructure leaks. Infrastructure leaks can expose critical system information, leaving companies vulnerable to cyber attacks. Railtown AI's proactive error management system identifies and addresses potential infrastructure leaks before they become exploitable vulnerabilities. As detailed in their blog, Railtown AI provides tools that monitor and secure the underlying infrastructure, ensuring confidential information remains protected. 20 minutes to go. So they've learned from industry setbacks. Understanding past industry failures is essential. The CrowdStrike issue highlighted how poor software practices may lead to significant vulnerabilities. CrowdStrike faced scrutiny when flaws in their software exposed clients. Railtown AI analyzed what went wrong and developed strategies to help other companies avoid similar pitfalls. By focusing on code quality, adherence to best practices, and continuous monitoring, Railtown AI ensures that software vulnerabilities are identified and resolved promptly. Microsoft Azure outage. The global Microsoft Azure outage demonstrated how ignored bugs can lead to widespread service disruptions. An overlooked error brought down critical cloud services, affecting businesses worldwide. Railtown AI emphasizes the importance of proactive error management. By integrating their AI-driven tools into the development process, companies can detect and address bugs early, preventing costly outages and maintaining uninterrupted service for their clients. What sets Railtown AI apart is its commitment to proactive solutions. Rather than reacting to issues post-occurrence, Railtown's AI tools are designed to identify and mitigate risks before they have an impact on the business. This forward-thinking approach is a direct reflection of Corey Brandolini's leadership and vision. By leveraging AI and machine learning, Railtown AI provides real-time insights into system performance and potential vulnerabilities. This allows development teams to focus on innovation while the AI handles error detection and prevention. Under Corey's guidance, Railtown AI has become a trusted partner for businesses seeking to modernize their software infrastructure. Their client-centric approach ensures that solutions are tailored to specific needs, delivering tangible results in efficiency and security. Railtown AI's success is not just in the technology they provide, but in relationships they build. By educating clients on best practices and the importance of proactive management, they foster a culture of continuous improvement and vigilance against potential threats. The conclusion. The success story, of course, it's not in the stock price yet. The success story of Railtown AI and Corey Brandolini is a testament to the impact that visionary leadership and innovative technology can have on an industry by addressing the core challenges of PII leaks, infrastructure vulnerabilities, technical debt, and software inefficiencies. Railtown AI is reshaping the landscape of software development and system security. As the tech industry continues to evolve, companies like Railtown AI, guided by leaders like Corey Brandolini, are essential in navigating the complexities of modernization. Their commitment to proactive solutions not only protects businesses today, but also lays the foundation for more secure and efficient futures. John Jantz, marketing consultant, speaker, author, founder of Duct Tape Marketing Consultant Network. So thanks goes out to Ward for that. And I think I might stop there because he sent me a couple of other things, but I'll save those for tomorrow because the end of the day is fast approaching. Here's Ward. Good afternoon, William and RT crew. All right, before I go through them, it's 3:46. All the other stocks I listed are all in the red, but Railtown specifically is down 2.25 pennies. It's at 33.77. The bid is 33.73. So somebody's trying to sell it down. Again, they get rewarded for short-term thinking, short-term opportunistic selling. They just want to get it even a fraction of a penny lower. They're always looking for air pockets. They're always looking for weakness. The key word is always. They do it every single day. It never stops. It isn't about the story. It isn't about Corey. It isn't about the delay. It isn't about dilution. It isn't about technology sprinting ahead elsewhere. It isn't about holidays. It isn't about nothing. They just do it every day. So anyway, it's 33.77, 33.73, 34.79. The volume is 260,730 shares. What we're waiting is for is the end of the quiet period, which the start of the end was Thanksgiving Day. The end may come tomorrow, but the end may also be tied to news we don't know anything about that is considered material inside information that insiders and significant buyers know that we don't know. It could be tied to the TELUS revenue announcement. So it's possible this quiet period is easing up. There's no question it's easing up, but it may not have reached its final effect on us. And I just don't know which day. It could be tonight, could be Wednesday, it could be next Wednesday. But I'll tell you what, the clock is ticking on the shorts and their strategy. And I think all you need is two buyers. One buyer would be good enough, some research, and you start getting momentum. The momentum traders come in. You start seeing retail come in. You start seeing the price going up. You start seeing the Merrill Lynch rule be violated in the other direction, the direction for the good guys. And man, we could be off to the races such that the stock gets moving $2, $3, $4, $5, $6, you know. Could happen. All right, so Ward says, good afternoon, William and RT crew. Railtown software is being tested at Uniserve Communications facility for 3 to 6 months. Target metrics include 10 to 20% reduction in pew. Phew. He who farts in church sits in his own power usage effectiveness. Target metrics include 10 to 20% reduction in power usage effectiveness. So if they're already starting it, that's great news. That's just the testing that goes on. Data centers. Ward continues, if this test goes well, RT software will be in strong demand for data centers and the cybersecurity industry. No kidding, Sherlock. That's great news. Thank you for sharing that. Donna says, good afternoon, William, Jack, Ward, and RT crew. And I hope PS 71 is, I hope PS 71 got through the holidays and the lonely days without his dog. I hope everything's well with him too. Ward says hi to Donna. Eminem says, I keep buying and it keeps going down. I know. That's the luck of the Irish. That's just, it'll change. It just hasn't changed yet. And I know I sound like a broken record, but I think there's information out there that supports that it will change. I mean, guys and girls, the company acquired AIP partnerships. That's what we were waiting for 10 months. They did it. It's done. It's finito, completo. Esperanto. Obligato. Coronado. Some people have a way with words, and others not have a way, I guess. $260,730 shares traded. Ward says, keep buying it. Says, I'm tapped out for now. I think that's across our whole, we're either tapped out for Doge or we're just tapped out emotionally. Some of us are pissed off. Some are mad at me. Some are like, you freaking amateur. You just keep saying the same thing every week and your information sucks. But that's built into the psychological model that this criminal sting operation counts on. They never stop selling. They never run out of selling until it crosses over as a major position in institutional hands, where the institutions have research internally, have trading desks internally, have investment committees internally, have capital to invest internally, have reinvestable capital to invest internally. And then as it crosses $5, $6, and $7, the Merrill Lynch rule goes ineffective, is no longer in effect. And then you get research and buying at the brokerage level, both retail and institutional. And then the game switches to our favor, and the multiplication of shares daily ceases or it slows to a trickle. That doesn't mean they won't be ready to go if for some reason, you know, the Railtown stepped out in front of a bus and called it a day and got run over. You know, I can't make up a situation. They'll be there when there's the stock goes from in a disaster collapses, but they're there in every stock. This is the great weakness of our financial system, set up to benefit Ken Griffin and Virtue. And then it's set up to benefit Goldman, Stevie Cohen, the Toad, the prime brokers, the market makers. It's as corrupt as hell. But man, they got some money. They bought Hillary Clinton. They bought Jill and Jack Biden, Jack and Jill Biden. They've purchased everybody. And I don't, you know, unfortunately, I'm not sure that Trump's advisor group protects him from making some mistakes. I guess he just released one of these wealth advisors who apparently was convicted of stealing billions of dollars or costing investors billions of dollars, and Trump gave him a pardon. The banks own the White House, the banks own Congress, the banks own the judiciary system in the key places, the banks own the regulatory departments, both national and state level. They own the attorneys' firms, the white shoes attorney firms, the same firms that will settle with Mark Bazile. They work with the others. All right, I keep getting pestered every single day for an update on the financing that I've committed to source for this gold company. I cannot predict the future. And I do not know what's going to happen, but without going into it, the holdup, which is not the investor's fault at all, far from it. It may be in that little gold company that we're going to run out of time by the end of the year, January timeframe. Why? Because money is just pouring into gold and silver now. We've already missed, with this gentleman, we've already missed the silver market completely. You know, I'm not 100% sure he agreed with my call on it, but the trade I wanted to make as an offset to the gold company was, you know, 5 million in that company, maybe 3 million, 4 million, 5 million in silver. We'd already have made back our entire investment in the gold company. But that's not his fault. That's the, you know, the situation that's beyond anybody's control. It's frustrating. But I think what's going to happen coming around the corner after the holidays, I think Wall Street, just like they recently did with AI, they're going to create so much product for gold and silver and platinum and and industrial commodities, that everyone's going to be an expert on the dollar, on the gold silver ratio, on the ratio of gold and silver in the ground. Everybody's going to become an expert in the first and second quarter of next year. And so I think, just like in the oil and gas market, what's happened is these private equity groups, 35 years old, they come in, they have all this money, they buy up everything. So they take the first 10x, the first 50x, they take it out of every play. They overpay. Some of them might not want to work, but they take everything and they earn their fees. And then it might come available in an ETF or in an IPO later on to you and me. Well, this company is still sitting there such that I can still get in. I don't have any money. You can still get in. We're lucky that it doesn't trade, so the criminals simply cannot destroy it. There has been financing in the interim. You and I, well, there's a story behind me, but collectively we raised some money. We stopped about a year ago, 12 to 14 months ago. Another $1 million was raised during that time. Now, the status of the company, without going into much of a presentation, but basically the company was founded approximately 16 years ago, maybe a little bit more. It was founded after a search throughout North America and maybe Central America, but the decision was made to stay in a jurisdiction that used to have, anyway, a pretty transparent legal system. The search was made for so-called nano gold by a gentleman who's now probably 78 years old. But I've met him, and he's actually a very kind person to everyone, and he's very smart. I've had discussions with him. He's a really smart guy, but he's, geophysicist, geologist, metallurgist, brainiac. But he founded a gold company when he was in his, I may be wrong, but I think he was in his early 30s. And he built that gold company. It was in California, and he sold it. And I think he personally made something like 100 million, maybe more, back when 100 million was real money. And so he went on a multi-year, he took a break. He's married. He has a wonderful family, and owns, apparently, I've never been, but owns quite impressive property in Canada, which is controlled, or has veto power anyway, by his wife, and he's not gonna put his marriage at risk. And other assets that are, belong to let's call it a joint account. Anyway, he went on a multi-year search for gold companies with certain parameters based on what he learned from the gold company that he built and on his technical skills. So he settled on 2 companies. One of them, although I don't want to go into it on the internets, but one of them I'm on the board of, I'm an investor in, and I raised a lot of money for. The other one is the one you're invested in and I'm an investor in. They've got similar characteristics, but they're completely different assets. The one that I raised money on that I'm not showing you is a great opportunity, but it's a leftover slag. It's a residual asset from the Jerome mines, copper mines. And I believe Winston Churchill's mother married a Jerome, or she was a Jerome. That's it. She was a Jerome. And I think that's that same family. That's where she had the money. She married Winston's father, who didn't have a lot of money. And she spread her love around. And, that's how it happened prior to feminism. Womanism has been around a long time. Anyway, that Jerome copper mine created at high heat and by via furnaces, it created this slag material that separated the copper and left behind gold, silver, copper, and iron. And that has all gathered above ground at a facility where there are 2 wonderful, large industrial scale buildings, one for processing, one for laboratories and administrative, and even people staying overnight, I suppose. That project has the exact same goal, which is to go after nano gold, refractory gold, contained in the slag material. I got so involved with that. I've met all of the technicians. I've met the men and women, primarily men, from Barrick Gold, who came down to study it and then started their own consultancy. That project I think is fantastic, and I don't want to discuss the dynamic of it any further. But it has a lot of upside, but guess what? The upside is limited. It's huge. It really is huge, but it's limited by the quantity of slag. There used to be, and I put a big push on. I'm not going to go through the dynamics, but I had a whole strategy to go claim other slag materials. There was a similar one nearby, But because everything's taken so long, somebody else bought that slag pile. So now it truly is limited by the size of the slag material. So it's it's probably 10 years, 20 years of production. It's a fantastic opportunity. But the total, I'm trying to do it in my head. The total gold which could be recovered at that project is somewhere between 6 million to 10 million ounces. And it is a massive project. Nobody knows about it, but I'd love to take that company over or work with the current, work with everybody there and make it a success. But that isn't on offer right now. And I wouldn't get you into that milieu unless I controlled certain votes. So here, but the advantage of that investment, it has a limited, although great upside. There is a bailout zone where if everything's screwed up, you could just sell everything and probably at least, well, it used to be the case, at least get everybody's money back. I'm not so sure. What I understand is a lot of that collateral is being sold. So it's getting riskier and riskier. But let's get off of that topic. I'm just telling you about that because this gentleman, after searching projects all throughout North America and southward, I don't think he looked around the world. He might have. He settled on 2 projects. That one, which I know intimately, and the one you invested in, I'm invested in. Those are the only 2 he chose. Well, going to the one you and I are both invested in, it's in a different state. The initial work on that gold company, they raised something. Now I may confuse with the one I know, but I think it's about the same numbers. And I do it by memory. It's before my time. But I believe they raised something like $90 million. Now, it could be less than that. But they raised a lot of money back during the last gold bull market. And I know a lot of the investors. I could be wrong on that number, but it's of that magnitude, tens of millions of dollars. And it was based on a procedure that I'm going to call chemistry for sure. I know a little bit about it, but I have no clue. I'm not a metallurgist. I'm not a geophysicist. I'm not any of this. But they raised all this money. They built an impressive plant. They bought the best equipment. And with great excitement around 2008, 2007, maybe 2009. I invested my first investment in 2009. So I think it happened before I got in, but they hadn't made the transition yet. Anyway, around that time, they processed this material in the plant. Okay, they did two things that are significant to our investment. They used third-party agents, third-party eyeballs, to prove up part of the resource, and they used third-party eyeballs on a standard off-the-shelf assaying method. So they got a concrete, proven, recoverable amount of gold in this play. And the other thing they did with the money is they built this plant and ran the material through the various machines and stages to take the laboratory test up to the commercial scale production. For simplicity, both because I cannot explain it to you in detail and because the details are irrelevant, for simplicity, that was a chemical process, and it was based on laws of attraction at the visible and invisible level of particles. And what they found as they scaled it up to these bigger machines, they couldn't come up with a method to not attach the machines to the ground. And they're, regardless of trying to use buffers or whatever, the machines were attached to the ground. Now, you could catch me out in my story because I am not a metallurgist or a scientist, but this was how it was explained to me in general. So anyway, they could not get away from the fact that the earth is charged. The earth has a negative charge or a positive charge, I forget which. It's probably negative, I guess. And everything they were doing got all betwixt and between. It still works. That method still works in the laboratory, but when it's scaled up, it's got to counteract the charge of the earth. They couldn't make it work. Everything he tried. Then they tried. They spent money. They couldn't make it work. Now, it still gets the approximately, it still gets the 0.038 approximately ounces of gold per ton in the resource using a standard assay method. But what they were going for with this process was to try to get above 0.2, 0.0 and as high as a third, or even up higher if you include, they have palladium and silver as well. But they wanted to get a higher, let's just call it 0.20 ounces per ton, using the chemical method. So they had to go back to the drawing board, raise some money. A lot of, it's a little like the Railtown example, a lot of emotion, a lot of being pissed off, a lot of, hey, you said that would happen, you know, a lot of that. But they kept trying to make it simple, to make that chemical methodology work. And so I invested in it. I put more money in it, put more money in it. That took me up to about 2012. And I think that's about where I stopped. But by that point, I think I had about somewhere between 250,000 and 400,000 in it. Maybe a little more than 400, maybe 440. It all confuses me because I helped somebody else exercise their warrants, and then they sold some, and I can go recreate it, but suffice it to say, I put a lot of money in it by that time. Why? Because the upside was so exciting. Well, then the frustration that the chemical method didn't work set in. The idea of taking a break and thinking about it, but also the guy went back to the drawing board. And so the period of sort of 2014, 15, 16, 17, he went back to the drawing board. Everything was on hold. They still tried the other methodologies. I got involved in this other project, so I didn't follow it all that closely, but the excitement was there, but it seemed like everything, what's going on? Well, all of a sudden there was a new method that was working. It was called, let's call it physics. There's two new methods that work. Let's just call it physics. Two new methods. It doesn't rely on some sort of chemical attraction. Two new methods that he created. And he bought a bunch of equipment. He bought the best Batmobile, Microsoft, and the best Batmobile, other thing and other thing. And they came up with this over a period of testing. But two things happened. An earthquake happened. I'm not sure. I've never visited, but it's used as an explanation for the delay. I have no knowledge firsthand to refute it, but it did damage to the plant. Well, the plant needs to be remodeled for that reason, but the plant and upgraded, but the plant has to be upgraded anyway because the new process needs new machines and a new process system. So anyway, that's one. And secondly, we all know about the shutdown, the economic shutdown that happened because of the and everybody had to take the ho-ho, and we all know about that. Well, that interrupted travel from Canada to the United States. So everything got on hold because of an earthquake and that economic shutdown. And that set up an opportunity at the beginning of last year for all of us. The company was presented by its largest shareholder, who is this gentleman, with a proposal by his company. I need to raise $4 million. It's since gone to $5 million because of, it went to $5 million last year. I don't know the exact reasons, but I intend, if my financing is not my money and I'm not taking credit for it, but if I'm involved in it, I tend to make sure that it's well documented and it's staged, with milestones. But anyway, it may not get to that point. And I'm not upset about it. It's just the bureaucratic delay has been enormous, and that delay may run up against the reality of private equity and other cram down investors, people that can act. When I first got involved with these two companies, gold was well under $1,000. It may have been as low as $650 an ounce. Gold is now approaching 4,500, and I think it's going to blow through 5,000 very soon. Silver's breaking out, so we've missed that trade in the pair. My idea was to pair that trade with Ireland, but it just, the money hasn't come available. So January of 2024, he came with a proposal to raise $4 to $5 million, and then it firmed up at 5. It could have, at that time, could have been done for $4 million. And he sought financing, and I figured that he would put up the money, or one of the investors, all very wealthy guys out of primarily LA, but some New York, some elsewhere. But I wanted to do it, and if I'd gone to London, I would have shown it to a couple of our Middle Eastern clients, but I didn't get to London, and I had other things on my mind, and I thought, well, it'll get done. Well, it turns out we had 2 meetings, all shareholders, and I think a little bit was raised, but these men are all in their 80s and 80, I'm literally 85 years old and older. Not all of them, but a lot of them. And many aren't, by trust rules and family rules, can't make any investments anymore. One of them did put up the $1 million, and they have an engineer. I don't know if he's a metallurgist, but they have a qualified, trained, experienced gold, silver type guy in-house. So it's not like, some money got raised, but it was kind of similar to what I've experienced with Railtown. A lot of frustration that gets caught up, very understandably, in the delays and the emotions and all that. So that's when I, with another gentleman that's been a long-time investor, arranged for us to be able to invest, and that's what we did. And the company is, as I understand it, fully capable of it's all paid up through next year, through 2026 obligations. Um, and I think it's just a brilliant opportunity for the larger financing. But what I see now is we're going to run up against private equity at the turn of the year or some other investor. And I don't know if it's likely, but it's certainly a real possibility that I'm not going to get a chance to fund it. And it's not my, without going into details. So I think there's one last chance for us if we want to. And I'm not saying you should, because I personally think you should be invested in Railtown now. But I can in my brain see an opportunity if we could get a little money into this company and then Railtown worked out next year, we could be the guys and girls with just a bit of our money that really ramp it up. So it's an opportunity. I'm not suggesting at all that people take money that they'd otherwise put at Railtown and do this. Although the upside here is enormous. It's probably, if everything works, not only probably, it is larger than Railtown. However, it's not as assured. And I'm not saying Railtown has some, we have to get through some steps. But anyway, if you remember the other company I was telling you about, all they have is between 6 and 10 million ounces of gold. Well, this company's third-party analysis on a certain small part of the resource proved, and I'll say proved in brackets because it has to be done again, and it has to be done by an acquiring company, but they proved up 6,600,000 ounces. 6,600,000 ounces. If we focus just on that, and we assume gold is trading at 4,500, the cost of recovery, if it works, is under $500 an ounce. So you have 6,600 ounces times 4,000. That's 26,400,000 in revenue. If you assume, I would use a smaller number. I don't think it'll get to this number, but it's easier for me. If you assume 1 billion shares fully outstanding by the time all is said and done, that's a target of $26.40 a share. $26. That's on this 6,600,000 ounces. Well, that was done on a portion of the resource down to 200 feet. But third party, they drilled sonic drill holes down to 600 feet with some of the drilling. So they tested some of the resource down to 400 feet and 600 feet. And they found the exact same thing as in the 200 feet. Well, if you just assume down to 400 in the existing area, using the 0.038 recovery, I can't even do 6.6 times 2. You get 13 8,200,000 ounces at the 0.038. But here's the thing. By this new system, which has two different methods, and is actually producing higher than 0.20, Okay, so that'd be times. I'm almost done. I know I'm imposing on you. I'm going to use approximate numbers. And the second example, the first example is instead of just the standard off the shelf method, they can prove up commercialization of the process at greater than 2.0. You have 34,600,000 ounces. If you go down to 400 feet instead of 200 feet, you have 69 million ounces of gold. And that's just on the subset of, it's about a quarter of the whole resource base. So the upside is ginormous in this company. But anyway, they need the money to finish. They've done all the testing. They get actually higher than 0.20 every single time. There's no risk of the Earth communicating with the machines. They just need to build enough of a pilot plant, so they can produce gold every day. The goal is to run 26. I don't remember the number. I don't think it's 26 million. I think it's 26,000 tons. Anyway, whatever the number is, they're going to run every day for a period of 90 days producing gold. When that happens, it's going to be an amazing story. But in the meantime, here's the risks. Number one, it's high risk. So there's always the risk, whether for legal reasons or for execution reasons, there's always a risk of it blowing up. I don't think with gold at these prices that risk is that high anymore, because I think they can sell it to Gold Strike. But we have to acknowledge that zero is a possibility. We also have to acknowledge a risk of a cram down. If private equity comes in, or if somebody else comes in, we're all going to get crammed down. So I still stick by my original projections that you're paying 4 cents a share in a sale, sort of as is. Maybe it's $4 a share in a sale as it is, $4 a share. But in a cram down, it might be $1 a share, which I don't want to see happen. But in the example of producing it and selling the company and getting an override or just building a company, it could be $40 a share or $80 a share or much higher. So anyway, I'm getting a lot of pressure. If any of you who are in it are interested in investing additionally, again, if it's a choice between Railtown and this, I would do Railtown. Let me find some other people for this. Or if it's new people, because there are some new people, let me know by my email. I already started calling people in it today, and I'll see what happens. But it's a very exciting story. And I just like to stay in control a little bit more by raising some money. Anyway, let's leave it at that. I've consumed 30 some minutes of your time, and I apologize to you. Okay. And by the way, miners are going to be one of the places to be. I would put this at the moment as a high risk miner. Lower risk miners are the ones that produce, but we won't need to produce to have Barrick Gold or a Newmont come by us. And one of the analysts put out, Barrick Gold and Newmont may not be able to buy us. The number will be so large. It might have to be a consortium. This is on a scale of the Carlin trend in 1960. It's pretty big. All right, so Patient Swings put this out today. What it says, and you may or may not trust his judgment, but I think he stayed pretty close to this story. He says 34.50, 34 and a half cents on Railtown. When the company puts out news and all the bots, the robots, and the posters go away, it'll be bullish. If you have concluded that the delays in closing the AIP deal has derailed the bull case for Railtown, now would be a great time to consider a new perspective. Now's a good time for an attitude adjustment. So anyway, let's go through here. Dale Emmerich, some have a way with their words. Others just have a way. Yeah, very good, Dale. Jack Hamilton, hey, Donna, hope your Thanksgiving went well, and there's lots of leftovers. It was excellent. Hope yours was well as well. G did sent you a Venmo last night. Thank you very much. What you do is appreciated. Use it at your discretion, even to grab a few more shares. Thank you. I gotta put out fires with my bills. That's what I have to do. So, but I really appreciate it, G Diddy. It's very kind of you. I know you could have bought more shares, so I really appreciate it. Jack Hamilton, it was a great Thanksgiving, Donna. Thank you. T. Alex, while there is a period of confidentiality, a strict framework for communication during a merger, I know. It's not referred to a quiet time in the context of Canadian Apparently it's not at all anywhere. But what do you suggest I call it? I have no idea. It's not called a, I don't know what to call it. It gets so cumbersome. Um, the fact is, the company probably is in a quiet period right now because of earnings. It may not have anything to do with Railtown at all. I mean, with AIP at all. Railtown owes its financials, so it may just be in a quiet period because of earnings, and that usage of the term is the correct term. I would suggest to you that the financial report, the fourth quarter and the annual, which was probably due on November 15th, maybe the end of November, is still due now. So the quiet period may have more to do with earnings, believe it or not, than anything I was trying to tell you. It could be with AIP or TELUS or something else we don't know. It simply could be the real usage of quiet period for earnings. Could be. Donna says, I'd like Railtown to stay down so I can fund my 2026 Roth and get my Social Security check started so I can see an upside either way. The only stock I have ever had peace in owning, important in retirement. Yeah, maybe confidentiality period. Maybe that's what I should call it. A period of confidentiality. Confidentiality period. I like that. Confidentiality period. Yeah. No, I don't know. Gold and silver, still lean to buying silver, but I'm frustrated that that whole trade's been missed because of bureaucracy for what I was trying to do. And it frustrates me to no end. But you, like any situation, you've got to see what the market gives you now. And I would bet you're right that you want to be maybe 80-20 silver gold. I would bet you're right. Donna, thanks, William, for blocking the shill. Now, isn't that better? I blocked him after reading 2 of his posts. I just hate seeing you get stressed out. Not good for my gout, not good for my the color of my hair, not good for my sleep habits. You're right. I can't Venmo you. See. Okay. Well, I appreciate you thinking about it. I'm going to just put that up one more time, just so people have it. Just put it up first for while I finish. It's 4:45. My summary on everything I'm trying to tell you today, with just as loudly as I can, is all the uncertainty of the AIP deal closing is over. The deal closed. We know the number of shares. We know the so-called dilution, and it's complete. Secondly, ignoring all other revenue from conductor, from the other 4 tools, the cross-selling, ignoring everything except, and the roll-ups, ignoring the roll-ups. just focusing on the hosting revenue at TELUS, which will be shared with Railtown. And remember, it's about forward projections. That's what it's about. I think you can make a case. You can sit down with a piece of paper and come up with any number that you think. But I think one can make a case that sometime in the first quarter or by the end of the first quarter, the company, research analysts, institutions will be able to argue that Railtown will benefit from the revenue sharing deal to the tune of $50 million going forward 12 months. Now, what multiple that gets might be different than the 200x or the 150x or the 100x or the 80, 90x that AI deals are getting. We don't know. It all depends on how rapidly that grows. But on the other hand, that revenue, you've got a data center that's empty. It's all it is capacity. It's brand new, state of the art. Once it's signed up, that revenue will last a lifetime, conceptually, or at least until data centers are built in space. So that gives maybe some more comfort to that revenue. In any event, at 50 million, if you use 10x, well, let's use 12.5x. 12.5x. That gets you essentially to half the Langchain valuation. If you use 25x, that gets you to the Langchain valuation. Railtown's currently valued at 50 million in market cap. Langchain's valued at 1.25 million in market cap. You don't have to issue any more shares to get this revenue. So if you take the current price, that difference between Railtown and Langchain is 8.5x. Is 25x. 25x. That gives you a target price for Railtown if it catches up without issuing more shares. If it catches up, which could happen overnight, sentiment can change on a dime. That gives you an $8.50 target. If you want to haircut it by half, your target's $4.25. Ladies and gentlemen, Railtown is cheap. And the lag right now, I like that gentleman's term, a confidentiality period. It might be because of the confidentiality period, which is, AIP plus 72 hours maybe, or AIP plus TELUS, or AIP TELUS and something else. We don't know. But it also could be the quiet period in the true definition of that term, earnings. Railtown has to post its financials. And it might be in a quiet period until it gets that done. We know, to put it kindly, they're understaffed. Perhaps to put it a little more rudely, they save money on their, on some of the people they hire to get those things done. I don't know. So anyway, it's 4:54. Let me just check to make sure we're not at war. We got to pray. We got to pray for. We got to pray for peace. But let's just make sure we're not at war. It looks like there may be. There may be peace in the Ukraine, but I don't think it'll ever, necessarily stick. But that's good news. Trump just got his physical. He's a big guy. I wish he could lose a little weight, and I wish he'd stop drinking Diet Coke. But otherwise, he doesn't smoke, he doesn't drink, he doesn't drink, smoke, or use drugs. So he's probably in pretty good shape. Doesn't look like we're at war. That's pretty exciting. Well, I wanted to go over mining today, but I'll save that for tomorrow. I got an updated Morgan report we can go through, but I'll save that tomorrow. We have 2 more items to go through. I think it's 2 that Ward sent me. And who knows? Maybe there'll be some, maybe the financials will come out tonight or tomorrow, or maybe there'll be some other item of daring that is announced. But for now, I think I can't say we had a great day. We're down 2 cents. We closed at 33.77. But as someone told me, first the volume, then the move. And maybe we're just churning through some of this artificial selling and maybe some real selling, and we're getting ready for the move. The market, the Dow was down over 400, NASDAQ almost 100, and S&P almost 50. So that could be part of it. But with that, I think I'm going to bid you adieu, and thank you very much for listening to me. And everybody, thank you very much for chipping in. I really appreciate it more than you know. And, I'll cut off the shills and I'll stay on. I'll stay on as long as I can, hopefully through the end of the year and onward. All right. Peace to everybody. Peace to each of you, and peace across the world.